Hello everyone, welcome to my presentation. Today I'm going to present you my paper under the title of How to Value a Company with Negative Earnings. This is a case study of Tesla Incorporation. This is me. My name is Agha Winartha. I am currently in my final year of doing a double degree bachelor program in Bandung Institute of Technology, Indonesia, and also in Advanced School of Business in France. I'm pursuing Bachelor of Management in both universities. Today, we're going to start talking about the research background. Investing is becoming more and more popular these days. One of the most considerations when choosing the right company to invest is the profitability of the company, because they want to make money out of their investments. Hence, choosing a profitable company will be necessary. However, if we look at the reality right now, numbers of companies, startups are still generating losses, yet they're still attracting a lot of investors. In this case, I took Tesla Incorporation as an example. Why Tesla? Well, Tesla was founded in 2003, but has just only recorded their income for the first time in 2020. They also, right now, the world's leading EV manufacturer for years. They had experienced a huge growth, 900% of growth of common stock outstanding holders from about 114 million in 2013 to over 1 billion in 2022. So this question pops up into my head on how do these investors value unprofitable companies so they are willing to put their money there. So this is becoming the research question, how to analyze the valuation of Tesla as a company with negative earnings. Therefore, the main objective of this paper is to understand the valuation of a company with negative earnings. So we start talking about the valuation. What is valuation? Well, valuation is the methods of measuring the value of a company. It is critical and commonly undertaken by investors before investing, before they put their money in a company. There are two types of valuation: financial valuation and non-financial valuation. Financial valuation is determining the value of a company from its performance through the company's financial statements. The most common one is called discount cash flow, or often called as DCF. It can be done by discounting all the future cash flows of the company. The second one is called relative valuation, which we compare the income statements of the company to the competitors. Then we have non-financial valuation. We often use this as a complement to financial valuation. Because in this one, we're determining the value of the company from the management, from their plan, the strategy, and etc. This is the research design of the study. We're going to determine the value of Tesla. Therefore, we try to do the valuation from both perspectives: financial valuation and non-financial valuation. Financial valuation consists of two methods. The first one is called discounted cash flow, DCF, and The second one is relative valuation, while the non-financial valuation will consider three aspects: quality of management, CSR or corporate social responsibility, and future plans of the company itself. So we're going to start with DCF valuation. The first thing to do when undertaking DCF valuation is estimating the income statements of the company. In this study, there are two main factors that contribute to the forecast. The first one is each account's growth from the past 10 years. And the second one, company's past activities and events. For example, in 2012, when Tesla launched a new product, a new vehicle, the revenues and operation were increasing. These factors can be used to estimate the growth of each account. So these are the estimated growth for revenues, operating expenses, net interest, depreciation, capital expenditure, working capital. From this estimation from 2022 until 2031, we have the estimation of the future cash flow of the firm. After knowing the future cash flows of the firm, we're going to calculate the WACC, or weighted average cost of capital, which consists of cost of debt and cost of equity. Here we have several components to compute both costs. The first one, default spread risk, is about 2.5%. That is obtained from using the credit rating of Tesla, which is BA1 according to Moody's. There are also risk-free rate about 1.79%. It is taken for the US 10-year maturity government bond on January 31st, 2022. And also the tax rate, 37%. It is the US marginal tax rate. And the beta of Tesla is about 2.044 according to Zacks. And for the market risk premium, 5.65%. We took this percentage as from the average risk of Tesla's main markets, which are US, China, and Norway. These components can just simply use in the formula, and then we can compute the WACC for 9.61%. So this is the financial calculation. Firstly, we calculate the enterprise value of Tesla by discounting all the future cash flows that we have earlier with the WACC discount rate at 9.61%. Then the enterprise value is reduced by the net debt of Tesla, resulting in equity value. And this equity value divided by the number of shares outstanding. And the estimated share value is $884.15 US on January 31st, 2022. The next valuation is relative valuation. There are the multiples used in this valuation are PE and EV/EBITDA. As a consequence, the comparison will focus on the earnings of Tesla and its peers. All the data used are the data recorded in 2021. The average of each multiple for the peer groups is calculated and further combined with the accounts of Tesla to determine the estimated share price. For the multiple EV/EBITDA, the enterprise value has to be decreased by deducting net debt to become equity value, which is further divided by the amount of shares outstanding, which results in the estimated share price. So from the PE, we can have $1,017.70 US, And from the EV/EBITDA, we have 935.33 US dollars. Next, we move on to the non-financial valuation. What is non-financial valuation? Non-financial valuation is what we have explained earlier, is to determine the value of the company using the uh, management aspects or strategy aspects or the plan of the company itself. Here we have the quality of management. Well, Tesla's board of directors is filled with highly experienced and knowledgeable people that has made that has made a massive favorable influence to the world we're living in. We have Elon Musk. He is an innovative and visionary person. He is also perceived as someone that can bring positive changes to the world by being the board of directors and technological companies. He's also right now the CEO, CTO, and chairman of SpaceX. Then we have Robin Delholm and Ira Ehrenpreis, who was previously a venture capitalist. Then we have Lawrence G. Ellison, who is the founder of Oracle. And then we have Hiromichi Mizuno, which he has worked at the United Nations Special Envoy on Innovative Finance and Sustainable Investments. And then we have corporate social responsibility. Tesla's mission is to accelerate the world shifting to sustainable energy. Tesla also have been publishing their impacts report every year that focuses on four main aspects: people and culture, environmental impact, product impact, and supply chain. They also claim that they have reduced carbon dioxide emissions by 8.4 million metric tons, and also recorded a higher amount of electricity generated compared to the total electricity consumed by consumers. We talk about future plans of Tesla. Right now, they're still focusing on ramping the production of EVs and other energy storage products while improving the sustainability impacts of it. Maximizing the production capability on each gigafactory, and also they have new upcoming products such as Tesla Cybertruck and Semi, which means they want to expand their EV market into the electric trucks market. They also are planning to launch next-gen Roadster, which means Tesla wants to re-enter sports car market. So from this paper, from this study, we have conclusion. From the financial valuation, Tesla's actual share price on January 31st, 2022 was $963.65 US dollars, while the Tesla's estimated share price, using what we have calculated before, using this valuation is 884.15, and relative valuation using PE is 1017.70 US dollars. Using the EV/EBITDA is about 935.33 US dollars. So based on financial valuation solely, Tesla's share price on the market was slightly overpriced. However, if we look to the non-financial valuation, Tesla's actually, the quality of management of Tesla is good, even great. They have highly experienced and specialized people in different fields, as mentioned before. They also manage to operate its business in a sustainable way, following the company's CSR policy, as Tesla's contribution to a more sustainable world has been tremendous. and also Tesla's future plans by ramping the production of and launching new types of EVs, including Cybertruck, next-gen Roadster, and Semi, have attracted huge public attention. So therefore, based on the study, taking into consideration the non-financial aspects of a company, when valuing a company is important and valuable to complement the result obtained from financial valuation methods such as DCF and relative valuation. These non-financial factors certainly can be viewed as a stimulus to enterprise value growth in the future. These are the references. Thank you for listening.